Alrighty, traders. We are live. Let me bring this up for everyone. Got a lot of things I want to go with you guys today. Welcome to my humble abode. Just going to talk about a lot of stuff that's going on right now in the markets. Let me... All right, so I think that's in there. Yep. All right, so what I want to do today in today's session, guys, is I really want to give you some really important things to keep an eye on for with these live markets that's happening right now. What I'm actually doing with my own personal trading and how I'm positioning myself for these coming moves that's happening right now as we speak. And I've been coaching you and guiding you down the process of what is going on right now. And we're slowly starting to see that take place within these markets here. So I really want to give you some guidance around what to expect and what's going on with these markets here. So let me bring up firstly the good old. Now, typically disclaimer, guys, don't place a trade based on what you're seeing in this video. There's no guarantees of making a profit in the markets here. So just be smart about what you're doing here. Also, guys, make sure if you haven't done so yet, make sure you grab access to let me do this here. There we go. That's it there. johnsfreegift.com. So grab access to the book. And who am I? What gives me the right to talk to you on trading and stuff like that? Or if I go down to, actually, do I have that here? Yeah, there we go. Cool. All right. So who am I? My name's John Howe. I've been trading the markets for 20 years. My first 5 years, I was $250,000 in debt. This is my equity curve for 2024. And this is a screenshot taken about a month ago now, or just over a month ago, when it comes to my equity curve. This is my equity curve this year and what you're seeing right now. This is from my trading account. I have an investment account as well too, long-term investment account. But this is my actual trading account where I'm actively trading through there. So that's my actual results from there. Anyway, let's actually get into now the actual markets here. And let me go through and let me now share what's going on with these markets here and what's happening. So there's a few things, guys, that's really important that that's happening right now around the markets here. And one of those things that I'm really starting to see clicking the gear pretty strongly, actually. And that is, let me bring this up to here. Okay, cool. Right. So the first thing here is, the first thing here that I really want to sort of touch base on is, actually, you know what? Let me bring this down. Let me bring this here. I want to talk about this here because there's just this. One of the reasons why some of you guys have heard me talk about why I'm long the bond market now. Why have I got into a position in the bond market here? And I want you to understand the cycles of where everything is at right now. So if I bring this up to here. And so, again, this is my equity curve here for all of this year so far. So we'll see what actually happens by the end of this year. So one of the things that I see here, and one of the things that I see happening with the overall cycles of things, right? With the overall cycles and the bond market right now that's happening in the bond market is where this cycle is within this, with where the bond market is and the rates are within these cycles of what's going on here. So the first thing that I really want to sort of touch base on is why I'm involved with TMF. Right now, TMF is more like I have a view that within the next 12 months, I don't know exactly when, but within the next 12 months, we are likely to see a nice rise out of the bond market because interest rates have been slowly topping for the last couple of years. And then as we go, when we do know we're going to head into a recession, some people say we're already in it and so on and so forth. So when that happens and when that goes into, when that starts to go through the markets there, we're likely to see the cycles of lower interest rates and then obviously higher bond yields. We all do know that that's coming. The question mark is, I don't know when. So for me, instead of me trying to time the market, which no one can actually do, instead of me trying to time the market, all I'm doing here with my TMF trade is all I'm doing is I'm positioning myself in that trade, which I'm there right now, which I may be wrong as well too, right? But I'm positioning myself because I see that over the next 12 months, I don't know when and how it's likely to happen. I just know within the next 12 months, we're likely to see a nice rise. Is it going to happen in the first quarter or the second quarter of next year? I don't know. But my job is just to see where the puck's going. We do know where's the puck going. Let's just keep it simple. For the next 12 months, maybe for the next couple of years, where's the puck going? We do know the puck is what? The interest rates are going to start to come down, especially when we start to get heated up into more into the recession. The interest rates are going to come down even more, and that's going to cause the bond market to rally as well too, right? So TMF and TLT to rally from here. So that's the whole. People are like, no, bonds are not going to go up and so on and so forth. So I hope you understand that all I'm doing is I'm seeing where the puck is going within this cycle here, and I've put in a portion of my account. Not all of it, of course, but I put a portion of my account into TMF, and then now that's just put aside because come now within the next 12 months, I'm likely to make a lot of money out of my TMF trade because this is where we are now in the cycle. We're down the bottom here of the cycle. And as things start to slowly unplay, we're now likely to see this thing start to rise from there. And that's why whenever we go down to the, I'm going to bring back up now my charts here. Whenever we go here and I show you the TMF, right? So let's go to here and we'll go to, let's just see this one here, right? Yeah. So TMF, and we bring this up here and we squeeze this up. This is obviously a weekly chart we can see here. So this is where we are right now down the bottom here. So we're now likely to start to kick into an up cycle in the next 12 months. And that's likely to see this thing this is likely to rise into the markets from here. So what I'm all about is I am not an active trader, meaning I'm not getting in and getting out all the time, right? Some of my shorter term trades are a couple of weeks. That's my shorter term trades. Maybe even sometimes a couple of months. Because my preferences, right, the way that I like to trade the markets and what's been a saving grace for me in my trading career has been this. Let me show you. I'll go back to this template here again, this here. And the reason why I want to bring this up here, because I want to show you something here that I always share with my 1% group, which you can apply for at getjohntop.com. Do I still have that here? Yeah, here, right? So one of the things that saved my trading career, I used to be very active on short-term trading and short-term analysis. And one of the things that really, really clicked things in the gear for me, because one of the biggest problems with trading is over trading, right? Trading too much. Then the emotions get involved and so on and so forth. So I want you to be thinking about this. Now, I'm not saying you're going to do this, right? I'm not saying every trade's going to be a double. But I want you to be thinking about this from a mindset of, okay, if you're only 7 trades away from creating 6 figures, now again, bear with me here, okay? Some people say, you're not going to make money every trade and every trade is not going to be a double, which is 100% return. I get that, right? But it's a mindset. Think about the mindset. The mindset is most people trying to take 7 trades a day or 7 trades a week to try to make that 6 figures. Or get a 6-figure trading account. What was the saving grace for me? The saving grace for me was when I started to realize this, I realized that I needed to start to be a lot more pickier about how I'm actually approaching my trading. Because I used to be the 8-10 hours a day looking at all the futures markets and the foreign exchange markets and gold and silver on all those lower time frames, 1 minute charts, 2 minute charts, 5 minute charts. But once I started to realize where I was going wrong, I started switching more to, okay, what am I actually looking for that's likely to make a good move? Because if I can do that and I can have such things like options, then I can do, and I've done double is actually a small number for me. I've done 300%, 500%, 280%, 250%. Like these are sort of numbers that I've actually done with some of my trades. But the purpose of me bringing this up here for you is to show you that if you are struggling with your trading career this year's been a struggle for you, then one of the reasons why it's struggling is because you're trying to focus on too many trades and not the quality of trades. And so this template here brings down to, even if you're starting with a small trading account. Now, I'm not saying if you have $1,000 trading account, you're putting a $1,000 trade. I'm not saying that at all. What I am saying is this, I'm saying that one of the things that saved me is that, okay, even if I'm starting with a $5,000 or $10,000 trading account, I'm only 7 really good trades away from making now 6 figures. Now, the second question is, what's the setup look like that I need to focus on that's likely to give me that 6 figures? And so again, it's a mindset, right? And now what's the reality of this? It might take you 20 trades in total with some small profits, some losses in there as well too, right? But when you think about it, over the next couple of years, even if you're starting with a smaller trading account, you're only 20 really good trades away from potentially having 6 figures in your account or a 6-figure trading account. Right? It might take you sooner, it might take you longer, like so. But it's a mindset, right? Instead of trying to take 20 trades the next couple of months, think about it, okay, how do I be much more selective? Now, the issue with that is that if you're trading and you're trying to make an income every week from trading, you are going to blow yourself up out of the market because the market doesn't work like that. Because some weeks and some months, there's just no activity and you're not going to get some good setups. And then you do trade and then you shouldn't trade and then it goes down from there. So once I started to realize this, I started to realize and that's where now for me, I trade less, but I'm looking for the opportunities that I can be in it for 1 week, 2 weeks, 3 weeks, a couple of months. And within that couple of month period, I can pick up a good 200-300% return utilizing things like options. And I love trading options myself. And that's how you can really start to grow your account big time from there. So the thing for me is this is template here, right? This template here really was the saving grace for me because it stopped me from looking at the market 8 hours a day or 6 hours a day, intraday charts, thinking I had the day trade. And secondly, gave me my time back, meaning I'm only looking to get into trades that I'm likely to have a big move in the next 2 to 4 weeks, maybe the next couple of months. And 3, because I'm doing that, I'm now having these really big profits when it does move. So therefore, I'm having all these big profits when I do have these losses, which they do come. They're a lot smaller losses. And now it's balancing out. I'm having all this freedom. I'm jumping on these big profits. When I do have losses, they're smaller losses. And it makes everything set up much easier. And therefore, I make so much more money when trading this way. So, and again, you don't know how many, but it's a mindset. If you're trying to trade a lot, then this is where most traders go wrong. And then we can start to go into what would it take to be, 10 doubles to $1 million. Now, again, I'm not saying you're going to do this, right? There's no guarantees of making a profit in the markets. But what if I said to you that over the next 5 years, you're maybe 30 really good trades away from making $1 million over the next 5 years? One, it gives you something to look forward to, right? Like, oh, I can see that. I can see that. I can see how that's possible. But then where the work comes involved with it, the work that comes involved with it is then starting to learn, right? Then starting to learn what is the setups. And I always say here, like this one right here for me, right? I always say for me, the biggest saving grace for me was I have what's called, what am I looking for in just a good setup? And I have that. That's more of like a shorter term trade. And then on this side of the coin, this here and this here, I started asking myself, okay, now I understand there's the template there of even if I'm starting with $10,000 in my account right now, and yes, I've got to go to work and so on and so forth. But what does it realistically look like? Okay, I might be 10, 15 good trades away over the next 1 to 2 years. So if I wanted to get back to maybe six, if I wanted to get to having 6 figures in my account, right, or then potentially 7 figures, what does that actually look like? Okay, for the next 12 months, maybe the next couple of years, all I need maybe is 15 trades, maybe 20 trades with some losses, small profits, so on and so forth. And then I'm likely to do this, and then I'm likely to have 6 figures in my account. And then you can start to grow from there, grow from there, grow from there. Right. So, but then how that worked out for me was I started then asking myself the question, okay, if that's the case, what does the setup look like here? What are we looking for in a good setup that has the potential of making a big move? Because there are setup that has the potential, right? Because that's all we want. We all just want to have a high probability that having the potential of making a big move. Because if you're only 50-50 right, and you're trading things like options like I do, and you're making 200%, 250%, 300%, but your losses are like 10% and 30%, which that's what they've been this last 6 months. I've had big profits, 500%, 300%, 250%, 280%, 75%. And I've recently had a couple of losses, and they were like 10% loss, 30% loss. See what I'm saying here? So once I started to understand this template here, it gave me a blueprint, a map of how I can get involved with it. Then I had to get the work on. And again, this is the reason why I do coaching in the first place, is to walk you through this entire process. At getjohntop.com there. So what are we looking for to go start? And once I started to put this plan together of what am I looking for? And then I had this big thing here, right? Which is patience in and patience out. Patience out simply means just wait for the really good setups to come around. Now, patience in simply means that whenever you're in a trade, some of these trades just require patience. You need to let these things just go a little bit. And that's always hard, right? That's where getting real coaching and guidance really comes down to it, because it's trade selection is one thing, but then trade management is another thing, right? How do you manage the trade so you can let the profits run? / how do you control your emotions, your fear, your greed, it out while you're in those trades from there? And so once I started understanding this level here, I know in the back, I know where I'm at right now. If I completely lost everything again, I know in a very short period of time frame, I'll be back doing this here. Because I know the map, I know the roadmap, I know the template here, right? From there. So let me go back to, I wanted to explain that there, because I think a lot of traders, they get that completely wrong. Oh, by the way, for you guys that are wondering, this is my home. I'm actually doing everything from my home. I trade from home. I do everything from home. So that's what you're seeing here. I'm in one of the bedrooms right now. Though actually, this is my office. And I couldn't be bothered doing a bit of a background and spending all that time doing the background. My focus is on charts and so on and so forth. So you're wondering, where am I recording from? This is my home. Let me go back to here. So let's go back to this one right here. So we're here. So that's the first thing I just say. With TMF, now you understand the template, the blueprint of you guys. The next thing is now you understand why TMF to me is a high probability situation. The expectation of the trade is that it may take another few more weeks, maybe another few more months for it to really start to kick into gear. I don't know when it's likely to make a nice rise. I just know that there is a high probability of it making the nice rise from there. And if there's a high probability doing that, I could put a percentage of my account to the side, which I have. And then over the next 12 months, as it rises in the markets, then I'm likely to do really well from this. And that's all I'm doing with TMF. I'm not trying to time the market like it's going to go down, it's going to go up, it's going to go down. Right? If you look at this here, once again, all I'm really looking for from my bought position and even my investment position is if the market rallies up to here. See this? Oh yeah, I'll do this. This level right here is $80. Do you know if TMF only rises to there over the next 12 months, I'm going to make 100% return on my money? Remember I said before about doubles, right? Now that's with just buying it. I also have options on this trade. The options on this trade, if it does get there the next 12 months, which we do know there's going to be a recession soon, and then they're going to buy the bonds, and then the rates are going to come down, and the TMF and bonds are going to rise, and then so bonds are going to start to rise. They're going to buy the bonds, rates are going to come down, the bond market's going to start to rally. We all do know that's coming, right? It's not for you've been around for a little while, you know that's what happens in recessions and where we're going from there. So all I'm looking for is that over the next 12 months. We're probably going to get to the 120, maybe even 160 level by the time this recession really clicks into gear, right? So that's why I'm positioned there. Plus, also I have long-dated options on this trade. So when we do get that next year, a rise to there, then my options could be up to 300%, maybe 400%, depending on the volatility of the move, right? Because it's a volatility move. Remember I said before that I personally only need a double for me to make those numbers there. Now I'm already at that level there, but for me to continue going, right? So as you can see here, this is sort of thing here. This is buying it and letting it go. And over the next 12 months, we're likely to hit $80. That's a double. Buying the option, and if it does do that, you're likely to make not just a double, which is 100% return, you're likely to make 2, 3, 400% return. Now, again, you never put your 100% of your trading account on there, right? This is also about risk management involved as well too. But I hope you can see how I position myself smartly for these trades. So I have these trades going on the side, right? I have these trades going on in the side from there. And then I am also looking at all these other opportunities from there. So now you understand the whole TMF position here, right? For you guys that are saying it's wrong, it's going to go down. It may go down right now. I don't care. All I do know is come this time next year, we're going to look back. We're probably going to see a nice big rise in the bond market. We're going to see a continuation deterioration in the rates. I don't know how or when that's going to happen. I just know what is likely to happen within the next 12 months. My job is just to be part of it, sit back, put it to the side, continue doing my trading like I do, right? I do other trades and let the thing go. Now, again, I understand that there's a risk to this here. So we can go from there. Now, the next thing I do say is King Russell, right? King Russell, baby. Go IWM, King Russell. Now, one thing I've talked about here before is we're clearly in a very big bull market. Someone called me insane the other day for saying that we're starting a big bull market now and if you're watching this right now, I hope you can see how insane that comment was, because now we are in a very big bull market now in IWM. Look what IWM doing. IWM now has a high probability of the next 6 months of making its way up to around that 300 plus mark now. We're just starting to see this move. We're just starting to see this, right? What is technical analysis 101? What was significant resistance, a lot of the times it becomes support. Now, we don't know if it is, right? But when there is support there, or when there is resistance there, and then it does become support, my chair's going down, right? When there is, when that then now becomes clearly support, the market's telling you it's been resistance all this time. Now it's support. Now it's up from here. We go up from here. Right now, we're looking at a weekly chart here, by the way. So it doesn't mean tomorrow we go up or this week we go up. But an overall basis is if you understand these trends and how these markets work, when a market's done nothing for 3-4 years, and then it starts to break out, it's a brand new start of a trend. A brand new start of a trend. And damn, is my microphone still working? Is my microphone still on? Is it still working? That's weird, isn't it? Testing. My microphone gone. Has it? That's weird. Let me see. Oh, the mic's fine, is it? Okay. Damn, I just thanks, guys. Okay, cool. I didn't. I just wanted to make sure. Yeah, I just wanted to make sure from that's all work. Oh, it is too. It's, okay, cool. All right, thank you guys. All right. So as we can see here, right, we do know this, right? So there is, whenever we go through these basing patterns, now remember I said before about you're only 7 really good trades away from 6 figures and 10 trades away. The number one trading pattern to likely make that work is this here. Whenever you come across these trades here, there's a high probability of making a big move, not just a small move. Small move, right? And so what is that? A big move simply means from here, but big moves take time. They're not going to happen in 1 week, right? A big move is the Russell is likely to go to 300. If that happens, you've got options. Now you're talking multiple 100% return on your option trade. If it does happen, right? Remember, you also need to factor in losses as well too. And so due to the fact now we are continuing to make this high low and the moving average is trending up, we have found support. We are breaking up to the upside. And if I come back down to this screenshot here, right there, you can clearly see what's going on here. This is the short-term analysis. This is a bit more of a bigger picture up here, my top right chart. And look what's happening here. This is obviously my top, this is the top weekly chart. This is my weekly chart as well. This is now, it's pushing to the upside, right? We're pushing to the upside. We're starting to make moves from here. So there's a huge probability now, guys, that King Russell, and look how strong it is here, right? King Russell's really leading the way. Typically what happens, and just this is from my research and talking to ChatGPT and looking at market cycles and so on and so forth. Typically what happens is you start to get the Russell really start to break out late in the cycle. So Russell really starts to come alive late in the cycle from there. So that's why I see there, guys, that King Russell is now starting to come into play. King Russell is now starting to move from here. And it is making a higher low. And we are now out here. So now the King Russell has finally and officially entered a brand new bull market from here. And we should now start to see some really nice rising to the upside from here. So that's what I see from there. Now, one of the other things here is this is the same situation that's happening with the S&P 500, by the way. Right? So if I bring this up to here, check this out. This is the S&P 500 and where we're at right now. So there's actually a bit of a channel here, right? There's a channel and I'm actually expecting, I have an 8,500 target up here. That's the channel there. But if we look at the support and resistance levels, the major ones, you can see this is where this level from here is the major one, right? We have this point back here, resistance. It's clearly becoming support right now. The market is telling you it's not going down. So if you think the top is in, you're trading with your ego, you're trading with your hopes, your fears, your doubts, and not what the chart is clearly telling you. Hey. We are now clearly finding a major support level with a strong moving average behind it. It's going up. It's not topping. And if you are short this market right now, and again, if you guys have been watching my YouTube videos for the last couple of weeks, you know I've been screaming to the mountaintops about this move coming, and it has come. I'm already making really good money from this move. I put my money in my mouth and I got into it a few weeks ago. Actually, no, about a week ago. Let me go to here, right? I got into it down here, right? So down through here is when I started to buy some call options because of everything we talked about before in the past, the fear and greed index and the sentiment and so on and so forth. And now we're rising about that to new highs. I'm already making money on my options, and I'm seeing this more like a 6-month type of view, meaning within the next 6 months, meaning that I basically think it's a June options expiration that I have, and I'm already making money on this trade. It's a June expiration for me because I see within the next 3 to 6 months we're likely to see this thing continue up from here. And we're almost at all-time new highs. This is the S&P here. Actually, I'll bring this chart here so you can see all four views from here, right? So this is the S&P here. It's breaking out. This major resistance is now becoming support, and we're almost at all-time new highs. It's screaming more upside right now. More upside right now. The Dow Jones, same type of thing. Look at this here. Remember, guys, it's not about me. It's not about my thoughts. Who cares about me and my thoughts and my ego? And one of the big things here is what? Support and resistance change and rolls on a big, massive long-term weekly chart. Big, massive long-term weekly chart. So the Dow Jones is now, after all this time, and let me bring on this main chart here. After all this time, is now finally what? It's now starting to break out. There is nothing bearish about this chart. So if you're calling top right now, there is nothing here to say it's rolling over. In fact, it's just getting started. Major resistance levels, 1 and 2. And now look what happened. It came down, and now we're almost finding support. Not exactly finding support, but we're finding support around that level there. And it's pushing up and pushing up and pushing up. So the chart is clearly telling you it's stair-stepping higher. If this was going to be a top, we would fail here and we'd break straight back down. We're not getting that. The fact is that the market came down and testing these levels of support, like it did with the Russell, like it did with the S&P, and now like it's doing with the Dow Jones. Everything is now breaking it. It's coming back down. Is it going to be support or a false breakout? Not support. Away we go. And then on top of all that, if you look at the markets here and never use this 24 moving average here, look at my moving average here. Look at my moving average. What is this here? Whenever the moving average is making a move and it's overall trending to the upside, that means there's a long-term, there's a bit of momentum behind that move. So as you can see, all through here, all through there, and all through here, whenever the moving average was strong, any pullback we got or drop was short-term lived. So not only are we creating a scenario right now where it's major resistance becoming support, but now we have the moving average coming behind it, and we know with the with the moving average coming behind it, we do know that's creating a bit of a long-term momentum behind it. And with that momentum, we start to create strong trending moving averages. With that there, so strong trend and strong moving averages from there, and that creates it. John, suggest you don't gloss over your 2024 equity curve. Let me show you this here. I'll show you what is, if you guys are just joining me now. Where's my? Oh, here it is here. Well, this is my 2024 equity curve. Right here, Martin. Best qualification why people should listen to you. Well, yeah, this is my equity curve last year, Martin, but this is what my equity curve looks like this year. Actually, this is about a month old, but it's basically the same thing. I think it's just slightly down from here by last month. But yeah, Martin, and I've actually showed you the date here, so you can actually see this is taken like literally just a month ago. So it's just slightly down from here where we are right now. I think it's around the 300% mark again this year, Martin. So that's the best I can do, right? Now you can see that my equity curve looks different. They're different, right? This one here, 2024, I had a really good start to the year, and then I went flat for a few months, but then I had to pick back up again. That was last year, 2024. My results this year, look at this here. When the tariff situation was happening, my account barely did anything. And as you can see here, my account, this again, I put the date there of that cursor there with my equity curve. I use Interactive Brokers for my options. This is an options trading account because I mainly trade options. When I'm trading options, I also have an investment account, but this is just the options. But as you can see here, my real equity curve, this one here was different than last year. Last year, I had a big move initially And then we started to pick up from there. But this year, because of the tariff situation, I had to be really, really, really relaxed and focused and not be doing anything stupid because the big volatility moves. So I was really, really patient. I took a bit of a trade through here. And all this bit through here was I took some trades with the tariff, but I wasn't patient enough and it had to move up and then it came back down to break even and I got out of those trades. I was actually long Tesla at this time, by the way. So I had I had a good position on Tesla. I didn't take the SPY when the market actually crashed. I took a position here on Tesla. It bottomed, it rallied up, and then it came back down and it made like a triple bottom. And then I got sort of pretty nervous. I didn't know whether there was going to be more to come, so I got out. That's what this little blip here is. I had a few trades in here as well too. Nothing too like. I had some losses in here. I think I had one or two. I had one loss in here, and I think I had a profit with trading activities, but nothing too like really big profits, right? Just small ones. So that's what this one here, if I'm being honest with you guys. And so, or this one right here, that there was that there, right? And that there is that there, right? So you can see here that, yeah, so this little blip here was that there and why that happened. But I'm really happy I didn't go into a drawdown for my equity curve. But this here, as you can see, my first 3-4 months was very flat. There wasn't a lot of activity. But then suddenly, this is where I don't know how my year's going to play out. I know I have really good years every year. Last year was pretty much start off the back. It was actually a really good year for me, a really good boost. And then I went flat for a few months and then I continued up there. And then as you can see this year, or as of a month ago now, it's actually just slightly down right now. It's around about that 300% mark, somewhere there. And so, but this year, as you can see here, that I had this equity curve, this thing here because of the tariff situation, but I had to be really patient and not get too jumpy. So I had to be, I didn't actually have that many trades in the first probably 4 months of this year. But because I was patient and I didn't react to all that movement, then when the really good trades came around, I was emotionally and I was emotionally ready for them. And then as you can see, that's when everything picked up from here. I had a really big move here, sort of the middle of the year, and then I went flat. And then I had a few little dips through here as well too. This was actually because I was a trade I was in. I had a few dips and then I've had a big rally from here where we are right now from there. So this is my trading. This is my real trading results, as you can see here. And again, guys, with my coaching program at getjohntop.com, I'm doing this live with everyone every single day. So these results here, I'm showing that 1% group and so all that sort of stuff from there. So anyway, thank you, Martin. I really appreciate that, mate. Most of the time, Martin, I'm just trying to focus on techniques and things to actually help people and show people, as you can see, Martin, right? Like I wanted to walk through it just then because you mentioned it, but most of my time, I just want to focus on the techniques and the strategies and help people understand why I'm saying something. I'm not just making something up. You know what I mean? So I can actually teach people to make good decisions in the markets and how I think and all that sort of stuff. But I appreciate you bringing that up again, mate. I really appreciate it. Again, guys, if you go to getjohnshelp.com, that's an application for my coaching program that I walk through all my trades live every single day. So, and plus it's called the 1% group, by the way. Anyway, from the UK, amazing analysis. For more credit to you and your channel. What are your thoughts on XRP, if you don't mind? It's a dog crap. What is this? What is this fascination with XRP? Please explain. Please explain. What is this fascination with XRP? It's dog crap. And it's always got to be dog crap. Now, I know what you're thinking, and I've heard the stories. Yeah. It's a piece of doo-doo. Let me show you this here. Right, so let me bring this up to here. It's a piece of dog crap. Like, look at it. And there is so much fascination about these people doing XRP here. Oh my goodness. It's a piece of dog crap. Look at it. But do you know what, guys? This is where if you guys are trading on fundamentals, the employment data and the interest rates and what Powell says and this guy says and that says and the unemployment number and this and that and the PPI and the CPI and all that sort of stuff, and then you're trying to go to the market to make a decision on that, you're probably losing a lot of money right now because none of this makes sense to you. Like, how can the market be doing? The amount of stories, oh, the bank's doing this and this is happening in the big news here and that XRP, 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 and it's still a dog. Leave it alone. This is a piece of crap. Leave this thing alone. The fascination with this XRP, I just do not get it. I really don't get it. Follow the crypto sniper for that. Oh, it's a piece of crap. So, and by the way, FYI, guys, do not be making a decision in the market based off a fundamental. Because why? Oh my goodness, I'm going to short the stock market today because all this bad economic news, employment, I'm going to short the market. Then what do? 1 week later, maybe 2 weeks later, you're getting out because the market's gone against you. Hang on a minute. So you entered the market based off a fundamental economic macro data analysis, and now you're exiting because of the chart? What do you what? It's like, what do I do here? That's so unco. If you're going to exit because of the chart, you enter because of the chart. That's called trading, right? You don't, and that's where a lot of people are short in the markets right now. Like, okay, I'm long and get ready for the move to come. So, piece of dog crap. While I'm here right now, let me focus on crypto is definitely starting to hold up here, which is quite nice. XOM, who put that in there? Someone put XOM in here. TT3. XOM is actually really nice. XOM is one of my big plays, by the way, XOM. And I'll show you what I mean here. BT rally from here. I don't know. Maybe we're probably getting a short-term rally up towards 100 level, but then what happens from there? That's always the big question mark. So I'll show you here what I see here. If I bring on, let me bring on some of my big long-term sort of here. So I've actually got this in my watch list here. Oh, good go. Okay, cool. All right, XOM. So this is what I see here with XOM. This is monthly long-term data here. I'm not sure TT3 if you're still around, but mate, this is for you, mate. This is actually on my watch list. I'm watching this. I'm actually keeping an eye on this because once it breaks, then this could be a really good 1 to 2 year type of move, not a short-term type of move. Something like what gold's done for the last couple of years, because it's the exact same trading pattern, right? Look at this here. We have major resistance back here, resistance. We then have a really big move to the upside, and then we hold here, and now it looks like we're about to break up. Remember I said before about the Russell? What did I say before about the Russell? When the Russell has done nothing for a few years or more, it's the same trading pattern. This is just over a longer time frame. And then the resistance becomes support, just the same thing. This actually happened with gold as well too, right? Let me bring on the GLD chart. This is why gold's had a big move. You start to see these patterns here, right? Where's the GLD? Where's my GLD? Here. Right? Look at this here. The same trading pattern here, right? And if we bring on the weekly chart so we can just show you a bit more data, a bit more analysis behind that. Let me bring this down to here. Let me show you what I'm looking at here. Look here, right? So up, sideways for a few years. The same thing that's happening with the Russell right now. Look at this here. Came out, made a higher high, then came down, found the support of here, just like the Russell's doing right now. No, John, the top's in. No, it's not the top because it came out, it broke out, it's came down, it's now found that support, and now it's rallying. This here is exactly what the Russell's doing right now. Right there. It's happening right in front of our eyes. So back to the one of the charts that I love, which is XOM here. This is the data here. So we're having this and we're finding support and we're holding here for about 3 years here. I got April 17th expiration. Maybe I should roll them. I'm not in it yet, TT, but the expectation of the trade, April, that I'm not sure why you would be doing that. For me anyway, one, I need to see a break first, right? Because TT3, there's called price and time phases. A price phase is when the market has a nice move up. A time phase is when the market goes sideways. I don't know how long this sideways phase is going to last for. So I never get in on that. How I get a really good how I get a really good idea of when the next move is likely to start instead of getting in now. And this could continue on for another 6 months before it breaks. That's why I never get in now. I wait for a bit of confirmation that it's likely to be starting now, that move up. And what that is generally a breaking above that level from there. So when we start to get a breaking above this resistance level here, that's when we start to see the move from there. If I go back to, say, for example, I bring on the GOD price here once again, right? When did the big move actually start with GOD? Same type of thing. Same type of thing. So I'm not in it right now, but if we do break, then you've got to understand what type of trader you're looking for. For me, as you can see here, right? When did this big move start? The big move started when we started to getting a breaking above those highs there. Once we got this break up through here, then we started to see the move. So TT3, you're looking for a couple of month trade where it may play out exactly like gold did, right? It might go on there for a few months and then pull back for another couple of months, go up for another few months and pull back. But that's what I'm talking about there. It makes sense, TT3? So if I'm looking to capitalize this big move over the course of 1 to 2 years, then I'm going to have to expect to go through these swings. And if I bring on just this chart once again, all I do know is that there's a high probability, looking at just simple extensions, that over the next couple of years, over the next 1 to 2 years, we're probably going to start to see the first level here this is just simple extensions, guys. So the first target would be, say, 200. Again, that may take 12 months to get there. But within the next couple of years, there could be a high probability of it actually making its way up to about 250. Probably not. Now, this is a monthly chart, by the way, guys. Every single one of these is monthly bars. So that's what. Does that make sense, TT3? So once I understand that, if I wanted to position myself potentially for the whole move, well, then I need to buy at least 12 months worth of time with the options if I'm going to do an option play, and then let the trade play its out. Don't be so freaked out by 1 week or couple of months of not doing much. Makes sense if I want to capitalize that whole move from there, just like gold did. So I hope that helps out. Really good job, man. Really good job, because that's just, as you can see, this is one that I'm watching for right now. I need to see this thing start to break up. I need to see this break up. The reason why I do that, when it starts to break up from here, that's now giving me a high probability that this move is now likely to be starting. Make sense, TT3? Until then, we could go sideways for another 6 months, and then it breaks out. You know what I mean? Like, I don't know how long this sideways is going to be. Because if you look at something like like the USO chart, which I have been focusing on as well too. Like, look at the USO. I'll bring up the weekly chart just so I can show you this here. Right, this is the USO chart here. It can do this for years and years and years. So that's where, like, for me, I always like to wait for that breakout first from there, from that perspective there. Now, on the back of all that, guys, obviously I put in the title about gold 10,000. Just bear in mind, guys, that when we do start to go through a really big significant, and I do believe after this big move up, after this really big move up from here in the stock market, then I see a really big catering effect. And I believe that's going to happen. I believe this first 6 months is going to be crazy, even metals and miners. But on the other side of that, just bear in mind that when we start to look at, say, things like the GOD, and I'll put that in the title, so I want to cover that here for you guys. I see gold going to 10,000, right? But how that's likely to work is we're in a look at this is a month. This is actually a weekly chart here. Let me go to the monthly chart so I can show you. This is a long-term monthly chart of the GOD. And as you can see, we go through these swinging motions. So how we're likely to make that move is we may have another move to the upside here, like that, which may get us to, 5,000, 6,000. But then when the crash does happen, gold will get a massive correction as well too. So for you guys that are investors, it doesn't mean you sell. You just need to be emotionally prepared for it. So when it does do this and we get a big drop down like that, just understand that that's coming. You don't get freaked out, because then by the early 2030s, that there is going to be a setup for one of the greatest bull moves we've seen ever. Because then we're likely to see, something like that going on. Because if I actually let me bring on the actual gold price so I can show you here from the actual gold chart. Oh, I've already got it here, right? So there, maybe a retracement, and then we find a bottom, and then we make our way up to here somewhere. And then we might over 10,000 plus. This is how I see gold playing out. So if you're long-term investing in gold, one is a massive, bright future ahead of you. But secondly, just understand the high probability of the cycle of how it's going to play out over the next couple of years. I don't know the timing. I'm just really, over the next 2-3 years, we're likely to see this play out here. And maybe a short-term move up over the next 6 months, and then maybe a drop for 12 months. Don't get freaked out by that. If you're a long-term investor, just emotionally get ready for it so you're not freaked out, right? And because then most people get freaked out at that time. They freak out about this drop. That's when they sell, and then the market rallies back up again. So for you guys that are long-term investors, see this here and get ready for a really big move, because it could probably go 10,000 plus. For you guys that are traders, me as a trader that even looks like options and stuff like that, down the bottom here over this period here, I believe around the 2028 period, there's going to be some really good long-term, if I can buy some long-dated options on GLD, there could be some really good trading opportunities that might last, or even just an investment opportunity overall. So that's what I see there when it comes to that there. So just a question. Did you ever work in institutional or financial firm? Yes, I have. Yes, I have. I've worked for many different companies in the past. Over the last 20 years, my last 20 trading years, my last 20 trained. I can't talk right now. Over the last 20 years of trading, yes, I've worked for many different, a handful of different main organizations that I've worked for in the past. And now I just do my own thing. Now what I do is I'm a full-time trader. And then I have a coaching business on the side that I take on 15, maybe 20 people. That's my main thing, which is called the 1% group, the inner circle 1% group. And then I take on just a small handful of people every single year. I have some other things that I normally sell. Like if you go to John's flash sale, I'm selling a $4 trading course, something like that. But that's just neither here or there. From there, my main product I do have as a coach is that 1% group that I have. And that's what I'm here. I'm the 1% group. I'm the 1% group. Who are you, Thrifty? Please tell me. Please. What's the word for it? Reveal your face. Take the mask off. So yeah. So anyway, so that's the reason why when you guys see behind me, the minus 1% group. Oh, okay. So the reason why you see this is me from behind me, right? This is the real. My focus hasn't been setting up a big studio and all that sort of stuff. It's not my forte. That's not who I am, and that's not what I'm about. I'm a full-time trader. I have long-term investments going on. I have trades going on as well too. I do really well from a trader perspective. And then from a coaching business perspective, Yeah, I have a few things that I normally sell for $100 or $4, something like that. Nothing too much. But then my main product is every single year, and that's the reason why I'm opening up right now. Every single year, I take on 15, maybe 20 people every year in my 1% group. You're with me every single day. And that's my main coaching product, but it's only a real small group. And that's the way I like to keep it. I don't like to have, my main thing is I don't want to have a really big business on around education. I want to do really well as a trader, focus on that, and then take on a small handful of people and then help them become part of the 1% group where I'm at right now. So, yes, keep it simple. Focus on grind and trade / money. Nice. And then what I do, guys, is like, as I showed you before with my equity curve that I showed you today. Now, I'm not going to guarantee, guys, by the way, if you sign up to my coaching program, I'm not going to guarantee you're going to get those results. I've been trading for a long time, right? I know what to look for. I know how to have good trade selection. I know how to have good trade management, get out fast for small losses, let the trades go, control my emotions. But that's the reason why I do a coaching program, right? So I've been doing this here for a long time here. So I've got a fair idea what this is. But that's what my YouTube channel is all about, right? Is to teach you all these things I've been teaching you today. Like I'm doing today and all the other days, to help you with the things that I use, which are really simple, that make the needle move more than any other crap out there that you can focus on. And I'm talking about using indicators on a monthly chart, which has nothing to do with what's happening right now. So let me go down to here. So if we look at that from there, these are all the rates as well too. So rates. I just remembered. I put in the title, gold not ready yet. Let me just cover that, what I mean with here. If you look at this gold chart here, typically what happens whenever we go through these sideways resting phases, energy building phases, what I call them, they typically go sideways to the moving average, as you can see, right? So let me do this here. Sideways to the moving average, sideways to the moving average, sideways volatility to the moving average. So we're probably going to keep doing something like that through here. And then if the moving average does start to increase like that through there, then we may have, it may not be ready yet for that move to 5,000 or 6,000. It may need a bit more time like it's done in the past. And if it's going to repeat, then this is going to be the repetition of what is going on here in this marketplace here and what's going on here. So that's where I put in the title there, gold not ready yet. It's not the end of the road, but it may need, what is that from there? So from there to there, yeah, it may be the start of next year. I'm not saying it's going to, because this could start to really increase from here. So we could start to get the moving average increasing from here. So it may need another month. So maybe it's the start of next year that we may be getting ready for that next leg up from there. But just keep in mind what I said before, right? This big long-term monthly chart screams where we're at right now. And I bring on the GLD so I can get more data to data from there. Right? And then just expect something like this going on from here. So there we have it from there. So anyway, traders, that is it for me today. Hope you enjoyed today's live stream. Use these simple things, guys, to make your life much more simple from there. And please do not be making decisions in the markets based off a macroeconomics, because when you do that and then you get involved with the markets and then it goes against you, now you're getting out because of the chart. That's now incongruency. If you want to get in if you're going to get out because of the chart, get in because of the chart. So that's what trading is, right? Macroeconomics, it doesn't work like that at all. And now you're totally incongruent. No wonder you're not getting results from here. And it's like people thinking that bad economic news is going to create a top in the stock market. In fact, it's not creating a top in the stock market. It's actually getting ready for what I believe is going to be a really, really, really big move over the next 6 months. And it's holding support right now. And to me, looks like it's about to get going from there. So anyway, guys, thanks a lot for today. And I'll talk to you guys real soon. See you guys.